you to say it now. I dare you to say it. It's a Monday, which means it's time to talk FX. We've got Slavomir live on YouTube. His atmosphere is summing it up, his energy. Hello, let's hear some pips.
Love it. That's the sort of attitude you need to get pips.
No messing around, but Slav, just give us 10 seconds each, because Andy might want to just say a little sum to the Man United supporters out there. Because I know I want to say something to all the Tottenham fans out there. You tried your best, guys. You came to the London Stadium. You left with your tail between your legs with a 1-0 loss to West Ham. A little rivalry, if you don't know what we're on about.
Yeah, all right, mate. Look, you're talking about a mid-table clash here. Now, we're
in the top four. Boys. We're in the Champions League spot, mate. What are you on about? What are you on about? Anyway. You may continue with your Liverpoolness now.
How about we talk about the game at Old Trafford? That's where the real magic happened. I think you need to tag Ben into this live. Let's get him in here. Tag him in. Let's get him in. He's running away. Ben is, just in case you don't know, guys, Ben is a Manchester United fan, a big fan. So all I had to send him was a little smiley face, and it just it opened up a whole can of worms.
I didn't even get a response from someone that supports Tottenham. They wouldn't even dream. They couldn't even bring themselves to do a response. So that, do you know what? That's enough. The silence is enough for me. We've also got Anita live on YouTube. Oh, look, StreamYard have changed the way that the comments are coming over. Can you see that? It looks different on my screen.
It does look different, yes.
Not sure. I think it's as good, StreamYard. If you can change it back, that will be most appreciated. But thanks for letting us know as we go live rather than before. But hey ho. So look, guys, Andy and I have had our little gloat. We hope you've had as equally as good a weekend. Whether your investments in cryptos, I know a lot of cryptos have gone up. It's been quite a nice time over the weekend. We can talk more about that tomorrow, but maybe some of your cryptos have gone up as well, which is great. Maybe your sports teams have had good results. Maybe you've had sunshine. Maybe you've had a barbecue. Who knows? But that is done now. Monday is back around again. And now let's get back to business. We're going to talk about some FX, right, Mr. Demi?
We are indeed. I'd love to just carry on talking about this game forever. We could just maybe bring it up every week. Just remind people.
But I think we can get away with it for about a minute, and then people will start to switch off. So thank you. Thank you guys for indulging us.
Let's focus.
Exactly that. So look, again, an action-packed show. As usual, if you're just tuning in for the first time, thank you very much. We will make sure to focus on the matter in hand, which is all things FX. We will be bringing you an FX trade within 15 minutes. That is our promise to you. Low risk, high probability from the man himself, Mr. Andy Demi. We'll also be breaking down this week's biggest FX news. But first, I want to talk about the best chart patterns to use in FX. You're the man who's made over 123 grand in one trade from your days working on the trading floors at the big hedge funds in London. I think you're pretty well qualified to say whether or not chart patterns can be used effectively in order to make those gains. So in your mind, from the professional world, and obviously now as a professional trader, teaching other people how to become independent and make money and travel and work online, whatever it is that they want to do, have that work lifestyle freedom, are chart patterns still applicable in today's FX trading world?
Yeah, so today's obviously the FX show, so I'm going to kind of focus on FX when answering that question, because it does make a big difference. So you've got to, firstly, just for those that are very new to trading, I mean, what is a chart pattern? Well, essentially it's a pattern that's created on the charts, right? That is repeatable, and an expected outcome is what we think is going to happen next based on that pattern. Now, the issue is that when you open up most textbooks, you're going to see these patterns everywhere, right? This is what every kind of textbook 101 trading charting teaches, right? And that's good, because for a new beginner trader, it's great. You'll see a pattern, for example, like a triangle, and then you'll be able to go and spot it, and then you start to think, oh wow, look, I can see that pattern's happening right here, and this is what I'd expect to happen based on what the textbook is telling me. Now, it can be effective, and you should be aware of patterns for sure, like all the major patterns, and there are some that work better than others, and I'll get into that. But you've got to remember, in the foreign exchange world, it's not mostly retail traders that trade. It's mostly institutions that dominate this market, which is a little bit different to cryptos, which we'll be speaking about tomorrow. And so patterns in a way can be useful, but you might also want to consider almost doing the opposite of what the pattern suggests in the textbook in certain cases. And it's obviously, I can only talk high level right now because we haven't got time to go into the nitty gritty coaching side of things. But essentially, a pattern is useful in the sense that it gives us an expected outcome, but you have to learn to understand the context of that pattern and where we are positioned. And you've got to think, is an institution or a whale, somebody with a lot of money, trying to trap me here? Are they trying to make me go long by forming this pattern and then essentially looking to take it the other way? And so that's why patterns can be tricky, and it's where a lot of new traders get lost. However, having said all of that, there are some patterns that I do look out for that can be very, very useful, because it can give you very good reward to risk trading opportunities if you understand how the patterns work. So, yeah, so in a nutshell, Gavin, I think patterns should be learned, but you have to take into account the context when using them, so that you know whether you should be going with the pattern or against the pattern. Does that make sense?
Cool. Yeah, it does to me. Guys, let us know. Obviously, if you're not watching this on the live, then there may be some questions. We'll probably cover your questions during this little segment. I guess for full clarity and disclosure, people that don't know you, part of your job on the hedge funds was to do just what you said, right? To try and trap people. Like, your job was to go hunting for the reverse. Like, your job was to manage a certain amount of money and to extract money out of the markets, which is why one of the nicknames you've got in the group is Darth Demi. Now you've obviously come over to the light side, but just talk us through that. Like, what would be a couple of chart patterns that you would use for the opposite reason, to try and trap people in? Because I think people don't really, there'll be some people that are watching this that's never even crossed their mind before, that actually it's just a complete bait and switch.
Yeah, I mean, one of the typical ones is a breakout pattern. So essentially a range breakout, and if you kind of take any textbook, so a range can be horizontal. A range can also be a symmetrical triangle, for example. It could be a descending triangle, it can be ascending triangle. So these are ranges, right? So when the market essentially isn't trending, it's just taking a breather and the price is consolidating. So it's essentially going sideways. And so, if you are an institution, versus somebody who is not an institution, most guys who haven't worked on trading floors won't really appreciate that they can go into the market and buy any currency pair or sell any currency pair without really ever affecting the market. And they don't realize how much of a benefit that is. Because if you want to go and exit your position, you essentially just go sell and you exit, and the price doesn't change. You exit at the price that you want. As an institution, if I've got a huge position that I need to initiate, I have to be tactical. So let's imagine, we have euro dollar and I need to buy lots and lots of it. Okay, I need to buy lots and lots of euro against the US dollar position that I've got. Well, if I go into the market and just put a big buy order, the price is going to go much, much higher, right? Because even in a $1 trillion market like FX, it will create a movement like that. So we can't really do that. So what do? Well, we need the retail traders, the unqualified retail traders, to jump in and sell it so we can buy it off them. So what do? Well, we first sell the euro dollar to trigger people sell orders, because we know exactly where they're going to be getting in, because we know that they're following generally chart patterns that are learned in textbooks. So you trigger the sell orders by pushing the market lower, and then you start to slowly buy. So lots and lots of people start to jump in to sell, and then you keep buying and buying off those. And eventually, the market reverses. And that's why you see these traps all the time. They happen all the time.
I mean, so that's nuts, right?
What's that?
Sorry, mate. That sounds nuts to me. That literally it's like American football, basketball, soccer. If you're over in England, it's like the opposing team having your playbook and knowing exactly what you're going to do. It's nuts.
It is, yeah. I mean, it's essentially because every book teaches the same stuff. So, and that's where people start. It's like, oh, what's trading? I don't know what this is. Let's go to the textbooks. Let's go to YouTube. And then that's what you learn. You only learn those things. And then you don't appreciate that actually institutions know your playbook. So, and they have the money. So essentially it's very easy to manipulate that market. And that's for a very liquid market like FX. It's slightly different for other markets. And that's why context is very, very important. Because if there's not too many institutions trading something, then patterns work. So I know we don't want to go into cryptos, but just as an example, when something is unsophisticated like cryptos versus FX, that's where you have to approach it in a completely different way. Oh, there's a pattern, breakout. Now we should be buying it because everybody else, there's no institutional manipulation at this stage, not on the smaller coins especially. So yeah, in terms of FX, absolutely. This is you have to kind of almost do the opposite, in my opinion. For some cases, not every case.
So let's jump on. Let's show a few examples. Thank you to everybody that's tuning in live. We've got Con in Australia. We've got Roy as well. Good day, gents. Thought the footy might get a mention. Exactly that, my friend. You kept quiet your team of affiliation, though, so I'm presuming it's one of the losers from the weekend. And we've also got Michael Bruce in the house. Dedication is here. I was giving him some banter in one of the comments earlier. He is at work. He wasn't able to kind of just get some time off, but he's in the toilet as we speak. So let's crack on with this and try and give some information as much as we can, because people are on a clock. So let's get going.
You want me to do a screen share? Is that what we're doing?
Yes, sir. So we've spoken about this. Show us an example, whether you can find a live example or whether you just draw it so people can actually get a visual of what you've just said.
Yeah, absolutely. So let me have a look. But yeah, I can certainly draw it out for people to understand. the general context. So this is the, what have we got here? We've got euro dollar. I can maybe just go to a smaller time frame just to see if there's anything here that I can immediately spot as an example. So this is a type of thing. Again, this is not like going to be the perfect example, but this is the type of thing that we're referring to here. So if I just take a horizontal line like that, and so if you kind of look at this as an example, you've got the euro dollar and the market's trending down. And so let's say people want to sell, they want to go with the trend. So what do typically people do? So they'll either play a break of the lows, or they might play a break of a channel, something like that. Okay, so we know that these are, so you're going to have some triggers here and then some triggers down here. So if you imagine, like, if you're watching this as an institution, let's say we want to buy this, right? So we want to go long, and we're here and we're looking at this price action. Well, what you'd want to do is you'd want to trigger some people to start selling here and trigger some people to start selling here. And so initially you start to place some sell orders to push the market through. And this will basically trap people to come in and jump in here and then to jump in here, with the mission of basically accumulating and buying as the market. So now these guys are committed, and you basically at this point, you can start to buy. And and the thing with an institution is that they need to, market makers need to have certain amount of liquidity that they need to offer. So they need to purchase a certain amount of euros, right? For example, in this example, it's actually an obligation. So it's not a wish, it's an obligation. They need to provide, if you're a market maker, you need to provide a certain amount of liquidity. So it's not a case of hey, we think the euro dollar is going up, we need to, let's buy some. It's a case of we must buy some. So what happens is you start to now, as a good trader, you're trying to get the best possible price for your firm. So we can start to buy here. We can start to buy. So as it's going lower, we're buying. And even if it went low, we're still buying, because we need to build that position up, right? We need to get that position up. Otherwise, we're not going to meet our obligation. And so that's what happens. Essentially, you've trapped the people in, and then eventually, this sort of thing happens. And this happens a lot. And you have to kind of understand context. You have to look and see when this might be happening. But this is one of the most powerful strategies going against the typical pattern. So if you ever see, for example, think of it like this. This is a really big tip, by the way. If you got trapped at any one point, so you thought it's going to go lower and you get trapped, that's fine. You make that first mistake. But the second thing that you want to look at in this pattern is say, well, okay, at what point are these people going to get stopped out? That's a really important. So looking at the other side. So the guy that's shorted here, where's he putting his stop? Probably here. And then the guy that's shorted here, where they're putting their stop, sometimes tight, maybe here. So you kind of want to use these points to say, like, these are going to be basically points where you could be going on the other side. So as soon as you see this kind of thing here, especially if it's backed by volume and the general context, you could start to look to take the opposite of what the pattern was suggesting. So even if you get trapped, you could still take the other side at this point. Okay, that's a great reversal bar there. You've gone above this yellow line. Now this pattern is no longer valid, right? So it's a failed chart pattern, clearly. And then you see the market basically has gone higher. I was actually in this trade, funnily enough. I bought this. I had a stop at 114.90. I accumulated. I didn't get the bottom prices, but I did buy this, and it hit my target last week. I think I mentioned it. But yeah, these are good trades to take, and I'm always looking for them. I'm always looking for those traps in the market. So that's kind of a basic example of the kind of thing that I was talking about there.
Okay, so that summarizes basically why you can't trust chart patterns in FX. Is that correct?
Yeah, I mean, you can't. Exactly right. I'm not saying that all patterns won't work, but there's more of this type of thing than patterns working in FX because of just the nature of this market. Yeah. So I would say that's a fact.
Is it possible to say what is there a common denominator for a chart pattern that does tend to work, or does it completely depend on the setup, where it is in the range, or if it's in a channel, if it's in a trend? Are there too many variables, or is there one that you can kind of give to people to say, hey, look, this is actually a chart pattern that, as a professional trader, I know that this one works more often than it doesn't?
Yeah, there is. I mean, in my opinion, my favorite type of pattern is probably the head and shoulders pattern, because it's a very, very specific reversal pattern. And I like the fact that it's a reversal pattern because it allows you to get in at the perfect price. So if I just kind of briefly explain what it is and how it works and why I particularly like it. So a head and shoulders pattern, let's say on, like, if you're reversing an uptrend, is where you have this kind of left shoulder and then you have this head. And what I really, really like is this. So here is where the right shoulder, so this is what so let me just put it in a different color. So this is what you're expecting, something like that, right? That's the reversal pattern. What I really, really love about this is that I know when the pattern is going to be wrong very, very quickly. How? Because this right shoulder here, this right shoulder here cannot be bigger than this left shoulder. So I kind of know that I don't need to risk a lot to know if I'm wrong, right? So I know that, let's say I want to sell it wherever, here or here or here. I can get in, and if I see that actually it's not reversing and maybe it's actually just creating a bit of consolidation, I know that I'm basically wrong. I'm wrong on the trade, so I can just get out. Okay, so I quite like that because most people start with their stop above this head anyway, and this just kind of gives you a bit of breathing space. Now, this head and shoulders can end up turning into what's called a double top, right? So if you really believe in the reversal, and again, this is where it's a bit more complicated than just this high level conversation. Context is so important. Like, you have to have built reasons why this market's going to go down. Because if you've not done that work, a pattern on its own is going to be, there's going to be a lot of failed patterns. Like the higher time frame context is so important to whether a pattern works or not. But on the whole, I would say that this is probably my favorite type of chart pattern that I use and would trust, because it's for two reasons. One, it gives you a high reward, low risk trading opportunity, and two, it's very, very specific the way it's created, and it works quite effectively. I find it to be the most effective pattern available in FX.
Cool. So that's this week's segment. Let's jump into some news, and let's see what we can pick out from this week's big FX news of the week.
Yeah, let me see if I've got. Let me just open it up here. Actually.
If you've got any questions, guys, let us know. Roy has commented back saying that he supports Crystal Palace. Never saw that one coming.
Nice.
Having quite a good season. Thank you for sharing your dirty little secret with us, Roy.
It's not Roy Hodgson, is it?
No, wow. I wonder what he's doing now.
Right. So, yeah, let's have a look, guys. So it is the end of the month, and let's see what's coming out that is high impact this week. So nothing high impact planned for Monday or Tuesday. And on Wednesday, we do have some important numbers coming out. So from Australia, we have the CPI number, the quarter-on-quarter number. So the inflation figure expected to be 0.8% with the previous 0.8%. That's an important one. And when it's a quarterly figure, just to remind you, there's a higher chance of them getting it wrong. Inflation is one of those key metrics, very, very important for the state of the economy, and can be very volatile. So it can create a lot of volatility in the currency. Okay, so it really gives us a good gauge of how the economy is performing, because essentially if inflation is going up, it means people are spending money. And if it's not going up, it means that the economy is quite depressed still and not spending money. So it gives us a really good insight into how the interest rates might move. So that one's definitely one to look out for. It's if you're based in the UK, it's the early hours. If you're based in a different time zone like Australia, of course, then that will be something that you'll be awake for. Now, what else have we got? We've got, coming up from Canada, we've got the rate statement coming out. So, and the monetary policy report at 3 p.m. UK time. And then following on from that, the press conference. So again, this is going to be potentially a volatile statement depending on what's said. Sometimes there can be nothing, if nothing new is said. It's just really, one to just make sure that you are aware of when it's happening. On Thursday, we've got the ECB press conference and the monetary policy statement, and we have the Bank of Japan outlook report coming out, and we have GDP quarter on quarter from the US as well. So quite a lot happening on Thursday. And then again, GDP from, this is going to be quite important, potentially linked to what happens here. So let's say, for example, the statement might say, it might give you some indication of like, whether the rates are going to go up in the future. That kind of depends on how things are, it depends on the economic metrics. So GDP is one of those things. So they may leave some clues here, and then the GDP might have a bigger impact. So this basically measures the output of an economy. And, we have a previous of 0.1, minus 0.1, expected to go up to 0.7. these are kind of initial. If these numbers kind of hit, these are initial signs of, again, an economy thriving, and that could lead to potential future interest rate hikes. So it looks like a busy end of the week and end of the month. So Wednesday, Thursday, Friday, I think especially Wednesday looks super busy, and we could get quite a bit of volatility to end of the month. So with that being said, shall we head over and have a look at a currency pair, Gavin? Or has anybody got any questions?
Let me just check in with the questions.
A little sip of water.
Con wants to know. I think everybody's understanding, which is great, but Con wants to know, he loves the t-shirt, Andy. Can students get one when they sign up for the course package?
That's a good idea, Con. Well, not at the moment, basically. Maybe we can give them a digital version, an NFT.
Might be worth a bit more money, mate. It might be worth a bit more money.
That's true.
So I know quite a lot of people are always looking at Euro USD. They're always looking for some nuggets on that. We have had, so Neil's tuning in live on YouTube. He's requested GBP Aussie. We've had another request from mystery person. Identify yourself. Please log in to the StreamYard link so that we can see your name and your face. You're immediately discounted. We're not qualifying that one because you haven't let us know who you are. But CAD yen is a good shout as well, although I think we did that a couple of weeks ago, didn't we?
We did, yeah. So.
Okay, cool. So we've got euro dollar up. Whilst you've got that up, still, let's have a look and see what's there. So let's see. So the challenge is, okay, so the challenge is now, can Andy Demi find an FX trade in 15 minutes? Low risk, high probability. So we'll start off at Euro USD. If nothing comes up, then you've still got 15 minutes to try and find us a low risk, high probability trade, whether it's a day trading setup, whether it's a short, whether it's a long, whether it's a swing trade, whatever it is, that's up to you. That is your challenge. So let's get started. 15 minutes on the clock. Let's get going, Mr. Demi.
Okay. All right. So this is the euro dollar daily chart. Let's have a little look and see where we are. So we're still kind of in this kind of range really that we've been in for the last sort of 6 or 7 years. We haven't really budged too much from here, and that's really what we're doing at the moment. And it's always good to know the high level picture, which is essentially there. You can see we've got up to resistance there. We had some resistance there, went a little bit higher, and then recently we've acted there as resistance, came up, created this kind of double top, and we have dropped. Now, if I just kind of look at the way we've dropped here, it's quite a tight kind of price action, what you'd almost call like a wedge. So you can see there that it's not expansive. Now, if I kind of compare it to this, we didn't really have that so much here. This kind of felt a little bit differently. Like if you look at the aggression and the fall there, this one hasn't quite done it. I'm just looking. I like to compare how things have moved in the past. So we might just be kind of looking for a short-term idea right now. So we might be just looking for that next push up to here. For now, that might make the most sense. We've had a couple of bullish weeks there. I think we're we've got some dollars things happening. We've got the ECB press conference. We kind of need to know which way it's going to go. I mean, right now, this kind of little price action here is showing us potentially short term to go a bit higher. So let's bring in, just with that kind of background in mind, let me bring in the daily chart, and let's see if we can spot any patterns. So I'll have a quick little look to see where we are in the Fibonacci cycle, and hopefully there's something telling there. So that's good. I quite like that. So we have this expected 38.2 target, which gets hit essentially 90% of the time. There's a very strong chance that this market's going to go back and test, this area here, about 117.20. So it feels like to me the play should be like almost like a C to D on the lower time frame towards this target there, around 117.20 as a sort of first target. So what price have we got? 116.13. So what I'm going to do is I'm not going to waste time. I'm going to head straight into the 4-hour time frame and have a look at that. And again, I'm just going to keep this one quite simple. I'm going to look to see where the up fibs are. Okay, so we are nearly, we will nearly hit this level, which is 116.84. But because it's a reversal, I would always look for on the first swing of a reversal, as I always tell you guys, I always look for the overextension, which is the 200. And that level comes in at about 117.24. Just to remind you, that is the same basically as the daily target. So the daily target of 117.20, the overextension on the 4 is 117.24. So it's pretty much the same thing. That's where I'm going to be looking to target. Now it's just about finding an entry point. We're going to look at the hourly time frame in just a sec to see if we can do that. And yeah, let's go straight to the hourly, because I also want to do a little bit of extra work there to find the perfect entry for this one. Let's see, and we can always go back to the 4-hour if we need to clarify anything. So let's put in our fibs. Let's have a look to see where we are. So right now we've kind of, I quite like that. That could be a nice entry there, guys. 116.10 is the 618. I quite like that. And it's quite a nice little level there as well. So if we just stick a horizontal line there, somewhere there, look at that's a nice old resistance point. So around 116.10. Let's do a couple more things. Let's check out where the DTR is for the day. DTR is there. Let's see how we've been holding on the DTR. So we can just expand it slightly. Maybe put a 1.2 in there. That's a nice little fit there, right? And then if you have a look down here, it fits in perfectly now, and that's roughly on that line. So that would be, around where we are to 116.05. That looks like a decent little zone to look at buying this. Let me just do a down fib very quickly. That's given us. Let's take that off. I'm going to leave that for a second because I want to just quickly maneuver this. Let me take the DTR. So DTR is telling us where the low is. I've already done that, so I'm going to take it off now. I like to clean my charts up as I go. I'm just going to check how this market likes to move, identify an angle. That's one of the ways it likes to move. And then we have that kind of slightly more passive way of moving. We'll just there, look at that, perfect. It's on our line, guys, right now. It's literally bang on. So for me, that's a buy zone. The only thing I wanted to double check is the fibs on the downside. I might just do them manually. But yeah, this is a good ABC, AB 127, deeper pullback. Yeah, it's there now. It's just hit the 1618 there as well. So basically, I think this here is a good buy zone to consider. And what I love about this, guys, is that even here, like if you look at the hourly target, it's 117.30, 117.29. So I'm going to give you two ideas, guys. One is to look at potentially buying somewhere here where we are now. Stop can go behind the A, which is here. That's the A. Target up there, which gives you about a 2.5 to 1 trade. I know that because that's what it is roughly at the 618. And then you can look at selling this zone up here. So anywhere between 117.30 and 117.20 should be a fade trade. So you could look to buy up to there and then look to sell it back down. And that's the setup for today. And it's right now, just by luck.
Boom. So just to clarify then for everybody watching, this isn't financial advice. So if you're going to bet the house on this, that's your own prerogative. We have to say that because there are some strange decisions made emotionally when we come to finances, but that's a whole another conversation. So with that being said, just clarify, just give us like a 30-second elevator pitch of what you've broken down and what your prediction is for this Euro USD trade.
Yeah, absolutely. So essentially the first point is that we've identified, a couple of weekly up bars with the potential to go up a little bit more to go and hit this outer wedge line. That was where it started. So 2 weekly bars, that's a positive sign. And then we've gone over to the daily chart and we've identified that we've hit a D point. We know 90% of the time it's going to go up to at least a 38.2, which comes in at 117.20. We've looked at the 4-hour chart and drawn the up fibs, and we found because often the first swing of a reversal should go to the overextension. That comes in here on this purple line at 117.24, which basically adds confidence to that level that we found on the daily. And then finally on the hourly chart, we're not looking, just to clarify, we're not looking for the 200 because this is not the first swing. This is after multiple swings. So looking for the D target. So at the moment that D target is here. Okay. If this goes slightly lower and hits this orange line, which it might just do, okay, which is 116, you then move your target down to here, which is 117.13, which is again really in the vicinity of the same as the 4-hour and the daily anyway. And remember, this is not an exact science. There'll be spikes and so on. This is just a rough zone where you could be looking for targets. Now, if you guys really want to wait for confirmation, you can go on to the lower time frames if you know how to do that, like a 5-minute chart, 15-minute chart. Wait for confirmation on there, possibly a candle formation on there, and then buy it. So rather than just jumping in as the market goes down, that's another way of doing it. But yeah, as Gavin said, this is certainly not financial advice. This is just something that is, in my opinion, a high probability setup that you can learn from. And if it kind of meets your own criteria, then by all means, trade it the way you're comfortable, trade it with the right risk management, and trade it with the stop that you're most comfortable with. This is a safer stop. Some people will go, look, I want to go this on a 5-minute chart with a really, really tight stop, and you can make this trade a 6-7 to 1. That's down to you. And obviously we teach you to trade your own style. That's important. So that's it in a nutshell.
Good work, Mr. Demi. That was trade found and description done within the 15-minute challenge time. Stop the clock. We have done it again. So yeah, good luck to everybody that's going to be taking action on that. And just to clarify, although you're talking about going down to the lower time frames, you won't personally use that, will you? You'll just go between the 1 and the 4 hour for your entries, or to try and time your entries.
Yeah, there's definitely merit to doing it if you want to be in front of your screens, if you want to day trade, if you want to basically do this full time. It's not something that I want to do at this point, so that's why I don't do it. It's not a case of because I don't do it, it's not a good idea. It's more a case of how much time do you want to put into trading? Do you want to do this, for hours and hours every day in front of your screen, staring at your screens, tight stop, worrying about your stop getting stopped out, or are you trying to build a lifestyle? And for me, I'm in that phase, where it's more about lifestyle, family. So I'd rather give that bigger stop, get in, and I can just leave it alone, knowing that my stop is pretty safe. And I have to be completely wrong for this to be stopped out today. And it is a Monday, by the way, guys, which is a low volatility day. So you are basically, that's why I like these type of trades. You're fading on a Monday. Mondays are great for fade trades. And that's the type of trade this is. But if you are completely new to trading, don't trade it, please. Don't trade it. There's no quick way of getting rich. It's not going to make you rich just taking one trade.
Cool. Good advice there. What brokerage or trading platform would you recommend, please?
It depends on where you are based. But I would go with a broker that has been established for quite a long time. Don't go with brokers that just offer you bonuses and all the rest of it. Just go with an established broker. So I like to use Axie Trader, for example. Another one that's very well recognized is IG Index. These are great brokers that have been around for a number of years, that have FCA regulation. But there's others as well, which we can, we'll be happy to help you with. But personally, I like Axie. But yeah, I would go with a recognized broker like them too.
Cool. So that brings us to the end of another Monday show, mate. It's gone pretty quick today.
I think it always does, mate. When you talk about something you love, it doesn't really seem like time just flies, right?
Yeah, it goes pretty. It does go pretty fast. And talking of things that we love, who doesn't love cryptos right now? Tell me that.
People that are not in it.
Wow. Don't hate what you don't know. That's what I would say to anybody on that. And if you're still not sure about cryptos, then come and hang out with us tomorrow, midday BST again. We'll be back talking all things cryptos. And if you think what we've done today is pretty good, it will be just as good, if not better, tomorrow, because there is just so much going on in cryptos. There's so much more that we can do and so much more that we can show you. So, and we do, and we back ourselves on that to do that. So midday BST tomorrow, Crypto Like a Pro, the live show with me, Gavin, the host, and the man, the myth, the legend, Mr. Andy Demi. We will be back to talk all things cryptos. What are you doing for the rest of the day, mate?
I'm recording.
Ooh.
That's why I'm wearing
By the way, I see what you're doing there. By the way, guys, I'm going to post a link. If you want to trade FX and you're not sure what the hell is going on there, you need to start learning some sort of foundation. And like we said earlier in the show, you can try textbooks, you can try and use information that's out there, but if it's information and a playbook that the opposition know that's coming, is it really going to be that fruitful for you? So what Andy and I have done, if we've recorded a masterclass, which you can go to, you can get a ton of value there. If you decide that you want to take your education further, then we'd love to have you on board. As Con said earlier about students, we do have some really good programs. People are getting really great results. No t-shirt though, no London Trading Institute t-shirt yet. We can't promise that, but we can promise a ton of knowledge, and you will really escalate your learning and your trading career or trading knowledge, depending upon where you want to take things. Just another little shameless plug. What are you recording? Because I totally forgot about it, but I'm quite excited, mate, that you're recording this.
Yeah, well, I think there's been a lot of people that obviously, as you know, we've got a crypto trading program which has been very popular and got a lot of people a lot of good results. But that program is maybe slightly more advanced for some people that are new, and also some people that don't have the time to necessarily go and hunt their own trades. So we are creating a more lifestyle investment crypto course, which will allow you to basically benefit from the big gains without having to be in front of your screens to trade it, essentially. So, you know, if you're not really inclined to be a trader or be in front of your screens to trade, this is going to be great. And to top it all, I'm going to be sharing with people basically exactly what I'm doing. So the crypto investments that I'm making. So essentially, we're going to make it easy for people to benefit, because we know that, you know, people don't necessarily have the time, but they really want to do this. And so that's what we're creating, and it's going to be pretty awesome. But one thing that's really important is that I don't believe in signals. That's why we have to teach you exactly how things work. And then, you know, if we make recommendations, I guess, or if you can see my own portfolio, it's up to you whether you invest, but at least you have the knowledge to invest and how to use your money and know the risks and all the rest of it, because there are risks involved. So you have to really, really be educated so that you don't get caught off guard, because we only worry about things when they go wrong. Like, otherwise you think, oh man, I need to get in and get rich. But so yeah, that's what I'm going to be doing. So for the next couple of weeks, basically. So excited.
And yeah, I mean, on that note, like, just think, like, getting in on these trades that Andy talks about, these 5x, 10x, they're not uncommon. You know, a lot of people are achieving them, and you don't have to bet your mortgage or your house on one, because there's so many that are coming around. And one thing I will say from personal experience is, from the trading side, it's great. And even if you learn how to trade it, you will actually get better returns because you're timing your entry better, even if you're buying spot. But one thing about spot is that you're not going to have sleepless nights, because it doesn't matter if it goes down. If it crashes overnight, you don't have to worry about losing your position, because you actually own the coin. So this is about owning physical cryptos, and then trying to identify how to get 3x, 5x, 10x returns. And yeah, it could be a good time for you to come on board the crypto train. But we shouldn't really be talking about cryptos now. It's very naughty, but I am very excited about this.
The FX show's finished, so it's fine.
True, that's true. The FX show finished about 5 minutes ago. So with that being said, guys, I will post the link to the free FX training if you want to jump on board that and get more information about everything from the from the FX point of things. Then I'll post the link there. Anita's saying yes, she wants a t-shirt too. We're gonna have to sort that out now, aren't we?
Yeah, I know. Get on it, mate.
Oh, crikey! All right,
for giving Gavin some more work.
All right, guys. Well, we're gonna bounce. Have a great day wherever you are.
And
thank you very much for watching. Cheers, guys.